Hello, everybody. My name is John Davis, and I'm really pleased to welcome you to our Marketplace Payments panel. I'm joined with my colleagues here from Citibank, and I'll ask them just to briefly introduce themselves. I've been following the marketplace payment space for the last decade or so, as I've been at Citi Canada and at other banks, and I'm really looking forward to an interesting discussion. Maybe we'll start with you, Allison.
Sure. Hi, my name is Allison Walsh. I manage the North America Banking as a Service product team. I'm quite excited here to participate in this panel.
Hi,
Howard?
everybody. I'm Howard Kuhn. I manage the North America Fintech sales portfolio.
And Will.
Thanks, John. Thanks for having us on. At Will Artingstall, I look after the e-commerce solutions business for us across all of our transaction banking business.
Welcome, everybody. When we think about the key trends and the developments that are really shaping the payments market space and particularly marketplace payments, what are you seeing as the most impactful ones? Maybe we'll start with Allison looking at North America.
Sure. Thanks, John. I would say the marketplace landscape in North America is very dynamic. It's continuously evolving and is influenced by technological advancements, changing consumer preferences, and an increase in regulatory oversight. So I think about, a few things that come immediately to mind is your digital wallets. The usage continues to rise. It's driven by convenience, security, the ability to have contactless payments. And a lot of the major players that are competing amongst themselves have new entrants that are entering and offering niche services or innovative features. You think of things like buy now, pay later, which is also extremely attractive to younger consumers, not only for the flexibility and convenience, but without the traditional credit card debt. This not only blurs the line with what were traditional bank services, but offers kind of a frictionless customer experience as an outcome in this space. When I think of increased regulation, you're having governments enact stricter regulations around payment processing, data privacy, and security, not only to combat fraud, but protect consumer data and ensure fair competition within the payments ecosystem. Talking about security, with the increasing frequency of cyber attacks, data breaches, there's a heightened focus on payment security, things like introduction of biometric authentication, tokenization, and advanced encryption, which are becoming standard practices to protect transactions and sensitive information. So overall, I would characterize the marketplace payments landscape in North America as a time of innovation, regulatory scrutiny, and a relentless focus on improving the customer experience.
Well, when you step back and look at it from a global perspective, I'm sure a lot of the things that Allison called out for North America, you're seeing in lots of markets around the world. Are there other aspects when you take a global view that our audience should hear about?
Yeah, thanks, John. I think Allison did a good job of laying out sort of what we tend to see when we think about the trends in the payment space for marketplaces. I think when I think about this, I think about this from probably three core lenses, right? The first is that there's no doubt in my mind that this continuing reduction in transaction friction is continuing to happen. Like the way in which you go through the process of checking out or paying for or actually just generally using marketplaces continues to go through quite a lot of technological advancement. So we're seeing those type of experiences and the reduction of friction continue to be a theme, right? We've seen that over the last sort of 5 to 10 years, and that's just continuing. So, that idea of one-click checkout is fast becoming like no checkout. You're really having processes that are getting that frictionless when you're thinking about payments. The payment is almost secondary when you're thinking about experiences on marketplaces. And I think that trend is absolutely going to continue. I'd like maybe to double click on one particular area that Allison mentioned, which is really around regulation. I think she's absolutely on the money, but I would go a step further and just say, particularly one area we're keeping a big eye on right now is some of the progression that's happening with PSD3 in Europe. And the reason I specifically call out that piece of regulation is a lot of marketplaces to date have, for example, been taking quite a lot of solace in exemptions like what they call commercial agent exemptions that exist in locations like Europe. What that really means is if you're only serving one side of the marketplace, i.e. you're contracting only with the buyer and your marketplace allows for a contract between a buyer and a seller, you're essentially serving only one part, and you may be able to get exemptions specifically from that flow. So we tend to see marketplaces contract with sellers, support only the sort of seller side of the flow, and as a result gain those exemptions. What I would say is in the current draft and drafts that we're seeing around that regulation, it really looks like the bar for getting commercial exemptions is going to be raised pretty significantly. And what that means is that the likelihood of payment intermediation or regulation associated with intermediation will heighten specifically for marketplaces. So that's going to be a really keen area for us to watch as the PSD3 drafts come to finality towards the tail of this year. The second area I would call out in regulation that I think is quite important is FATF 16. So FATF 16 is also increasing the standards or the expectations for payment intermediaries in particular. So if we think about not just the heightening standards around what would be potentially considered as intermediation from a marketplace perspective, but you couple that with the heightened expectations around FATF 16, we could see a very tumultuous time coming through for marketplaces in particular. So that I think is a very, very big regulatory shift that's happening over the next sort of 2 years that we have to keep an eye on, really critical for us to be thinking about how we partner with some of the marketplaces we work with. The third and final trend I think I would point to, which I think is a really important one, is if you think about the historical way in which clients were thinking about their own online activity. So this is even potentially pre-marketplaces. Most of them were thinking just about getting online. It was just about taking my existing commerce model and getting it online. What we're definitely seeing a shift in is a move to third-party flows. A lot of them are seeing an opportunity to turbocharge their sales by adding third-party sellers, where they potentially don't have to be the core manufacturer or the core logistics provider, but they can add a lot of additional capability when they do that, or a lot of additional sort of servicing when they do that. So I think if you think about that, the targeting around sellers, the seller experience, being able to make payments as a marketplace in the payment preference of a seller is really a critical trend that we're seeing. So payment ubiquity will be a really big component of that. Seller lending will be a really big component of that. And then what Allison touched on as well, this idea of wallets on a marketplace and really bringing home a sort of true three-sided marketplace is absolutely, I think, the direction of travel.
Thanks, Will. And I think we'll pick up on some of the regulatory challenges a little bit further in the conversation. I think those are important call-outs. Let's flip to the consumer side. Howard, what are you seeing in terms of how marketplace clients are adapting to changing consumer behaviors, and what are they doing to try to shape that behavior themselves?
So I'm going to start by saying, first of all, I hate following Will because he always has like the nth level detail. So I'm basically going to say the same thing, but in 3 sentences.
All right.
So, I mean, look, if you look at this from a consumer lens, right, we live in a real-time world, and I'm the sales guy. So I'm, that's just the way we look at things. There's a myriad of ways like to move money around the globe, some instantaneously, some not. If you look at the physical world, I can buy something on Amazon today, like as long as I do it before like 2 p.m., I can have it delivered by 4 p.m. So the expectation is that everything is moving rapidly or as near real time as possible. All right. What you're seeing, though, and this kind of plays into what Will was saying about the sort of the expanded ubiquitous payments and the ecosystem expansion, is that we see from a client perspective a shift in, and I don't really know the right word, but let's just say responsibilities. So you've got traditional manufacturers, right? So think about your traditional corporates, think about a manufacturing company. To Will's point earlier, they're looking to have some sort of marketplace or participate in the marketplace world. It's not their core strength, but they either know or believe that there's something there that will help build sort of brand management or things of that nature. Then you've got the marketplaces who are out there selling goods, today to the public, but they're looking to expand their ecosystem. They're adding financial services. They can add funding. They can add other types of payment capabilities, other types of alternative payments for acceptance, et cetera, et cetera. And then you've got the banks and the fintech names basically going out trying to build these omni-channel connectivity solutions so they can tie everything up around the globe. So, that's all well and good. It's a very exciting time in the space, but what this brings is you've got this sort of regulatory overlay or construct that's shifting. It's really shifting the regulatory control from a centralized point, the banks, traditionally, that's where it all sat, to a more diversified group of participants around, basically in multiple markets around the globe. So I think the regulatory construct is something that will move the market dramatically over the next couple of years.
Thanks, Howard. Allison, what are your views on the regulatory challenges and how they bear on marketplace payments?
Yeah, I mean, I think it's a very interesting space. It's also one that's very much evolving and dynamic. If you think about what regulatory bodies are focusing on, consumer protection, data privacy, ensuring fair competition with your non-traditional participants and your traditional participants. I think of marketplace, your platform versus your marketplace payment providers, and where those converge and where those models are changing for our clients that are offering both the buyer and the seller the space to meet in the middle. It's where then do you have potentially regulatory ambiguity surrounding the platform liability and responsibility, and where, how will these payment service providers navigate the space? What is their compliance burden going to look like? And how is that going to grow or change over time? And in some cases, where do your traditional financial service providers like banks fit in to solve for some of these challenges or become a partner? And, where then how does competition change with what, most people perceive as being a more even playing field? I think navigating these regulatory challenges will require payment service providers and these marketplace platforms to stay abreast of what's happening in the market, to be able to invest in compliance programs and really robust compliance programs with appropriate processes, infrastructures to maintain that, and maintain a dialogue and a relationship with regulatory authorities to address any concerns that arise, which I think might be a different model than what they're used to. It might be something that banks are very familiar with navigating.
Can I maybe just add in there,
Yeah,
John? Maybe if you wouldn't mind, maybe one thing I would add a little bit to what Allison is saying is it's not all kind of doom and gloom. The one thing I think that's really good is actually we've got really good frameworks that we've learned from the payment intermediaries themselves about how a non-bank based organization can start to think about engaging with regulation and how to think about governance. And if you think about it, there's some fantastic models out there around. It's all about the process you go through when you're thinking about onboarding the participants that you're engaging with. It's about the 3 lines of defense. A lot of this kind of regulatory impact is going to have, yes, foundational impacts on marketplaces. The good thing is there's really, really good industry-based understanding for how best to go about that, and a really good knowledge about what best practice looks like. So I think that's a real pro to be taking away as you're thinking about some of that regulatory challenge as well.
And I think some of that sort of speaks to the maturity that the industry is experiencing as things develop. I wanted to talk about another dimension because it touches on the client side and on the regulator side, but this is on security and fraud, and just interested to get comments on what you're seeing from an industry perspective from our clients that helps marketplaces better manage security and fraud that they're exposed to. Will, do you want to pick up from that, and we'll go around the table?
Sure, I'm happy to start with that. I think it's an interesting sort of time to be talking about topics like fraud, because here's the funny thing, right? We've created very efficient mechanisms for you and I to transact online and to engage with corporate organizations, and to engage with other sellers that potentially we don't really have or would not have ordinarily had access to. Fraudsters and bad actors have the same access, right? So the real challenge here is, how do you go about trying to solve for that? Now, I think the first thing I will point out is that I think there's a lot of very good foundational things happening in payments that will absolutely improve how we as organizations can do things like monitoring. And what I mean by that is, if you think about some foundational changes like the adoption of ISO 20022 or CBPR plus, or if you think about like global funds transfer regulation, all of those processes that require additional data and additional information in a transaction help improve how we can monitor, help improve how we can track and trace what's actually going on every time a payment is made. So small changes like that to schemas and to technology are absolutely going to have a lasting impact on how we tend to think about that. The second is, I think one area we've seen a huge amount of engagement from with clients is, historically, everyone was very closed to a conversation around how we solve for this. I think what we've seen an increasing change in is we've seen a lot of clients come to us and say, hey, we want to partner. We don't want to solve this issue on our own. We realize that this is an industry-based problem to solve for. And as a result, we want to talk to you about what information can we share? What information can we be thinking about when we actually go about sort of reporting or creating programs around, for example, things like fraud risk management. And I think ironically, actually, one of the things we didn't mention, but I think this is an area where actually regulators have a role to play, because the easier regulators make it for us as financial institutions to share information, specifically when it relates to things like fraud or suspicious activity, I think a lot of that type of activity a lot of that type of engagement will help us drive sort of new standards. So, one area of appeal to regulators is that type of space where the easier it is for us to share, the easier it is for those types of partnerships to form and to make a huge amount of sense for driving the next level of engagement around this type of management. The last point I would bring out is probably some of the more transformative technology that's out there today. So, solutions like AI is absolutely being seen as a way that we could take this even a step further. So when you think about what I was mentioning in the beginning around how the data standards within payments is really being taken up a notch, the ability to analyze that data at scale, leveraging technology like AI, is really going to be a step change in helping us manage some of these bad actors and some of these actors engaged in the flow.
Yeah, I think those are great points. I'm definitely looking forward to see the combination of AI and data come together should really advance the whole industry and the marketplaces in particular in terms of security and fraud management. Allison, your thoughts on security and fraud?
I think Will really covered it quite well. I think maybe just in terms of tools, I'd maybe call out a couple others that we're seeing some, other marketplaces and organizations use, like your biometric authentication, and the ability to secure your transaction and authorize your transactions that way. Voice payments. I'm seeing that with some of our local banks here at the consumer level, using voice authentication to validate that you're actually the account owner that's calling in. And I think tokenization, which we did touch on earlier, is another area that we're seeing, I think, investment and capabilities grow.
Thanks, Allison. Howard, any last words from you on security and fraud?
Yeah, sure. So I agree 100% with Will's comment about the partnership approach from clients. It is a dialogue. We are seeing things. They are looking to harden their networks, and I'm not just speaking about just like throwing technology at it. I mean, technology is one component, but there are some clients who are very, very good at understanding the nuance of how like these various payment schemes work, and then there are some that are not as good. And what we're really starting to see are people looking to us and saying, well, how does this actually work? What is your interpretation of this scheme rule? And if your interpretation differs from the other correspondents in the network, well, what's the implication downstream? We had an example in Canada with one of my clients recently where there was an auto return for fraud. That had never happened before. They've been with us a number of years. They had never seen an auto return out of their omnibus account, back into the market. But it was because it was classified as fraud according to scheme rules. It was something that had to be returned in, X period of days. All right. So everybody understands, everybody can read that that's actually the rule. But the impact is because they've never seen it before, they were like, well, what's changed? And what changed was the way that these things were coming into us, right? So it's like, is it coming through in an automated fashion with the right codes, et cetera, et cetera? So clients are really starting to hone into like that level of detail to say, yes, I have good systems. I'm building out capabilities. I've got very senior compliance and risk and AML, et cetera, personnel. But do we really understand the process and how it works? And if something comes in this way, that means the bank is going to act this way. And maybe not every bank will act the same way. It really depends on how their systems are set up and how they interpret the rules. So it's becoming a much more partnership, engagement, and conversation to just an inordinate amount of detail that we have to kind of walk them through and understanding. And it's someone who sits sort of at the 30,000-foot level, kind of having sort of generic sales conversations. This is something that is very eye-opening to me because it just makes a lot of sense, right? It's like, all right, well, yeah, I never really thought of it that way. So
yeah, definitely. I mean, I think that the details matter in some of these situations, and it's really important to get them right and be able to communicate clearly with our clients. When I think about marketplaces, I actually think some of the greatest things that they've accomplished is they've changed expectations about the buying experience completely. Whether that's transportation, my expectations of what that experience is going to be like today are very different than they would have been historically. Retail is another great example where the experience is just really, really improved, and it's raised the bar for everybody. So I'm interested in your thoughts on how you're seeing clients and our marketplace clients optimize their user experience, drive adoption, drive retention, and how this connects to the payment experience. Maybe I'll ask Howard to lead off on this one.
All right. So adoption, I think, is tricky. There's a lot of ways to gather eyeballs. The classic example is, we're giving all transactions away for free. We see that a lot, especially with, up and coming, fintechs, people who are just starting up. They're just looking to gather a client base, right? On the sort of the wealth check platforms, you can buy eyeballs with price, with rate. I actually have an account with a fairly new startup. Today the U.S. Treasury bill, the 10-year Treasury bill is like, let's say 4.5%, but I get 5% today on overnight money. And if I refer a friend, I can get 6% for the next 3 months. All right. So, so that is something that, that will gather eyeballs. Now, once you amass the sort of the user base, then the trick is, what do you do to retain? What's the cross sell? How do you work? How do you work with these entities? I tend to think, and we've already touched on this a couple of answers already. I kind of call it the great convergence. So what I mean by that is, it doesn't matter, when this industry or when when fintechs exploded, let's just say, draw a line in the sand, 2015, right? As when this kind of became topical. These entities that came in, regardless of what they did, they were hyper-focused on sort of solving one use case. And they were really, really, really good at it. And, they somehow acquired eyeballs and, they built a business. And then over time, they realized that you can't be a one-trick pony. You've got to figure out a way to, how do we increase this, how do we build this business out? It's like, it's great to have, one thing and be good at that one thing, but where's the growth? And so whether you started out as a cross-border foreign exchange, entity, or you were an acquirer, or, wherever you sat in the ecosystem, what's really happening today is everybody is looking for how to describe it, but it really is sort of like banking as a service type construct. Everybody, if you started out at collections, you're adding some sort of storage and then a payment capability. So, it really boils down to what's the entire ecosystem end to end. So if I can control the flow from beginning, I can hold it. Maybe I earn some interest, maybe I pay some interest, maybe I have a funding mechanism in there, I have some financing capabilities, and then I have a payment mechanism. That's going to create the stickiness that hopefully retains and grows this business.
Yeah, it seems like marketplaces are looking at the value chain holistically, and they're making really smart decisions and very strategic decisions about how they're going to compete in that value chain. And if they don't occupy a space, then they open up the door for somebody else to claim that space and maybe challenge their own territory. What are your thoughts, Will, in terms of user experience, adoption, and really how this connects to the payment experience for marketplaces?
Yeah, so John, I think Howard did a great job framing this up, right? He's absolutely right. Like, actually, adoption is quite a hard process, and often I think when we look at the clients that we work with, frequently the difference that you see between the ones that are successful and the ones that ultimately struggle over time is their ability to really drive adoption. What I would add is, I think this problem or the challenge of adoption is actually really compounded because you also have this issue of substitution, right? Like, all of us have done this, right? We've opened up an app, we've looked at a product and gone, ooh, I don't like that price. It's like a gut feeling, and immediately opened up a second app and compared the price of the product on another app. So, when you think about that, I think, again, Howard's done a really good job talking about how clients have driven this ability to get eyeballs onto their platforms, keep clients engaged through, things like benefits, the actual process of checking out. I think the area I would expand on a little bit is that same issue exists when you think about sellers. So to flip that perspective on its head, if you're a seller looking at engaging with the marketplace today, you have multiple surfaces to choose from, right? There are so many out there today. And actually, what we're frequently seeing is a lot of the time, actually, a multi-marketplace strategy has been really successful for these sellers, right? So actually, the reality is, I think what is happening, a lot of what's kind of going on now is there's a big focus in marketplaces today, not just thinking about the buyer, but actually really focusing in on adoption and the experience for the seller, which I think is really interesting, right? If you think about that, a lot of that is now coming down to, like, how can I make the seller's life easier? How can I reduce the cost for a seller? And how can I give them access to, for example, financial services? Because if I do those things, they're more likely to pick me as a surface to sell their goods on. What that ultimately does for me is actually sort of do a little more of what Howard's mentioned, which is not just experiential, it's actually quality of product, quality of seller, that's actually helping to drive adoption for the buyers as well on that platform. Now, providing those financial services, providing those types of capabilities comes down to, in a lot of the cases, actually payments. Payments are a product when you think about serving a seller, because if I can pay them into the wallet that they've most likely chosen, or I can help make the process of them clearing a cross-border payment easier or cheaper, what you then drive is an experience for the seller that's something that they really want. And as a result, they're more likely to pick your marketplace. So I think it's a bit of a virtuous cycle. And that end-to-end narrative that Howard had sort of pointed out, I think as much as there's still a huge amount of focus on buyers and adoption on the buyer side, I think there's now just as much focus on the seller side. And again, it's also payment-led because of how much opportunity there is for payments to be seen as a product in settling to sellers.
Thanks, Will. I know most of it feels like most, maybe not all, but certainly the challenge for a lot of marketplaces is to scale and get global and to occupy their space in the market. And it's really a race to do that before anybody else does. And I do think we see a global competitive landscape for marketplaces in a lot of respects. Maybe you can talk about some of the challenges that marketplaces are facing in a global competitive environment, and particularly around cross-border payments, which becomes a key part of the value proposition that marketplaces are offering from a global perspective. Will, what do you see as the key solution set that marketplaces are utilizing for cross-border payments?
Yeah, thanks, John. And maybe something I should have mentioned at the beginning. I've been lucky enough to be in the payments business at Citi for about just over 4 years now, and one of the first roles I was in with the organization was cross-border. So I feel like this is like the sweet spot of my experience, as both having come from a cross-border experience and now looking at the e-com side. This is kind of like, in my mind, this is where I kind of cut my teeth in this space, right? And when I think about this is really about a couple of things that are inherently painful in cross-border, right? If you think about the historical way a cross-border payment was made, it was what I call a little bit of like hit and hope, right? It was you made the payment and then you really hoped in a couple of days it would turn up on the other side. There was very little transparency. It was quite expensive to do. And as a result, the experience was not great. Now, if you think about that historical context and you look at that from a marketplace perspective, marketplaces specifically because of the context of what we're speaking about, which is marketplaces in a North American setting, you don't actually have a huge amount of sellers that are onshore. Yes, you do. It's a big group of people, but from a percentage perspective, well north of 50 are actually offshore. A lot of the goods providers into marketplaces today are actually sitting abroad, and as a result are impacted by that historical context of what I was mentioning. So I think marketplaces have actually been an incredibly strong influence in driving experience for people that are getting paid through marketplace type flows. So if you think about this, we actually conducted a survey last year on this a little bit as well, just to try and figure out what it was that most entities were trying to solve for in the cross-border space. And there were 3 things that really came out very, very strong. The first was transparency in payments. So the ability to track and trace a transaction fully end to end, know where my payment is, was really, really critical. And I think that if you look at things like what Swift has done in the GPI space, that's really been transformative in helping keep payments traced fully end to end. And ironically, has actually driven the performance of cross-border payments as well. So we've seen a huge amount of change on that front. So that was the first area that was sort of raised. The second is that my payment should be what we call cost efficient. Doesn't necessarily mean lowest cost. It means it should be as efficient from a cost perspective as is required based on the payment of my choice, right? Because the payment of my choice is what really matters here. I may be absolutely comfortable being settled in a couple of days, provided the cost is really, really low. So that's really important in my mind when I'm thinking about this from a cost efficiency perspective. Not everybody wants their payment to be instant, because frequently instant payments come with liquidity costs and additional costs associated with them, because they do tend to be premium products. So I think there's a cost efficiency play there. And then the final point was speed. And I think what they really meant by speed was when I'd like to get paid, that's really when I should get paid. And that's really where that speed sort of narrative sort of comes in. Now, you sort of asked around what sort of solutions we're seeing in this space. I think, and this is not meant to be a product plug, but I think products like WorldLink within Citi's world, where you've created these payment ubiquitous platforms, and there's a number of examples of them out there today, have been incredibly powerful in helping to drive the next layer of cross-border payments, and therefore reduce some of these challenges that we mentioned from a historical standpoint. You can make multiple payments from a single account with embedded FX. And that is a huge leap forward when you think about some of the challenges you would have had in the past around cross-border payments. The ability to track and trace them fully end to end, make a payment in your method of choice to 140 markets and 140 currencies is a really powerful solution that actually is quite foundational in what marketplaces need in terms of actually settling the payment flow that they've got today.
Thanks, Will. Howard, I know one of the roles you play on our team certainly is you're out there in the market talking to, you're part of the team that deals with other banks that we bank. You're dealing with fintechs pretty regularly. And I know part of the role you're playing is working with companies that are assembling components of a value proposition together. I guess my question for you really was around the partnership opportunities that you're seeing between marketplaces, between fintechs and traditional FIs. How are these partnerships coming together to bring innovation for the marketplaces themselves?
Well, I think the innovation comes from just the everybody driving towards, the sort of the want for global instantaneous, settlements, right? So that's nirvana. So, everybody, going back to, what I said about sort of these hyper focused names, there's still people out there that are, just hell bent on building either, the next rail or, the next token or whatever it is to, to kind of improve the overall experience. And sometimes, they may have there might be a legitimate need for it, and sometimes they may just have like a better mousetrap idea, and they're hoping if they build it, someone will come. But I think from a partnership perspective, I mean, at the end of the day, from where I sit within the organization, this is just traditional correspondent banking, right? It's just with either banks or non-bank partners, and I think the ability to work together, I think it's still very much a green field, because if you think about the marketplace checkout experience, and I always joke with people when I meet people socially, either a cocktail party or something, or sometimes you're traveling and just kind of sitting and having a conversation, with the guy next to you on the plane, and they're like, yeah, I'm in the payments business, and they're like, what's that? And it's like, well, if you've ever bought anything on Amazon, they shake their head, oh yeah, sure, sure, sure. I said, well, every time you click that buy button, there's up to 7, 8, 9, 10 potential companies that are touching either the data flow or the funds flow, in that organization. And you sit there and you start counting it off. You've got people who sell the checkout button. There might be, an instant FX capability on that. You've got an acquirer, you've got a gateway, you've got a settlement scheme, you've got a settlement bank. So there's still a lot of greenfield areas there, that are, as people develop these ecosystems, there's still a lot of opportunity for people to partner and play. Now, I think long term, that's certainly not a viable, situation. It can't go on forever. But it's still, even though if we take that 2015, kind of time frame that I, threw out earlier, this is an industry that's 9, 10 years old. All right. I mean, clearly, I know Amazon has been around since they were selling books online. Y2K. I think we all have some old programming manuals from back then. But it's there's so many participants. There are so many people like trying to expand what they're doing, that I think overall what we'll see over the next couple of years is probably some consolidation, and maybe not necessarily amongst like the major players, the large money center banks, things of that nature, but there has to be a winnowing out, that somebody has to say, well, I don't have the bandwidth or the resources, to the capital to, to keep investing into some of these things, especially with, and I know we're probably going to touch on this a little bit more further, the regulatory ask that's coming down the pike to all of these new participants, so there's just I think we're in a very interesting space right now, where there's still a lot of, because the market is still growing overall, there's still a lot of stuff, a lot of things that can be sold, from a marketplace perspective, that's kind of carrying, like rising tides lift all boats, but when the tide goes out, right, isn't that Warren Buffett thing, then who's swimming with no bathing suit. So it's I think we're heading in that direction. So but still, it's a fun time to be in this space.
Yeah, I think so. I think so, Howard. I mean, I think one of the most interesting parts of it is that it's partly about the technology, but it's also about how the technology gets applied to really drive a benefit for the user, for the marketplace, for the regulators. Maybe Allison, I can ask you to talk about the emerging technologies that we've seen deployed in the payment space. What are the best examples where that's really impacting marketplace providers?
Yeah, I mean, I think I'd look at it as, it's not even about the payment itself. It's about that frictionless experience. Like, I shouldn't, as the end user, shouldn't be thinking about that payment, how I'm making the payment. I see things like, your smart appliances, any of your smart devices, that are, helping you automatically reorder the groceries that you have run out of, or that you order every week, or anything that's tied to, payments related to per usage based type of services. I think the other interesting things that I've seen are really augmented reality or virtual reality shopping, and being able to look at that item in your space that you're going to buy, or look at that outfit on and envision what it would look like on you before you purchase it. So you're, that's double benefit. It's making me, the buyer, sure about that purchase, less likely to return that purchase, and it's helping the seller have to deal with fewer returns as well. So it's really about how is the whole experience seamless, and I'm not actually thinking about payments. The payment is happening behind the scenes without effort, and it's that how are you actually getting me to your platform? I think it was a good example Howard gave about eyeballs. How are you getting me to your platform and leveraging what your sellers are selling?
Thanks, Allison. Maybe I can ask you to look forward, over the next few years. How do you see the marketplace landscape really evolving over the near term?
Yeah, I think it's primarily going to be driven by, further technological advancements, by consumer preferences. As you get more comfortable, not having to make some of these decisions about purchasing, that I could see driving a lot of the focus, and regulatory changes. So we're going to see, a lot of the new regulatory requirements that are coming out that are potentially being placed on marketplaces, shaping that. What's going to work, what's not going to work. I think we touched on digital wallets a couple of times during this conversation. It's, how is this going to continue to gain momentum and traction as a preferred payment method? I think a continued increased focus on security and fraud prevention. I don't see that going away. I think just as much as we'll be developing features and capabilities to prevent it, the bad actors are going to be doing quite the same on their side. I think just it is a very exciting payments. I think in general is a very exciting space to be, and particularly for marketplace type payments and platforms. We're just going to see continued innovation and transformation, driven by the factors that I mentioned before. So it's a very, very exciting space to be.
Thanks, Allison. Howard, what do you think we're going to see over the next couple of years?
Well, I kind of already hinted a little bit on it. I do think that the industry is ripe for consolidation, especially because of the regulatory oversight that is coming down on participants who have either were unaware they needed to be regulated, were never regulated before because it was just not something that the market was focused on. So I really think the overarching theme over the next couple of years will be how does the industry itself deal with all of the regulatory environment, good, bad, or indifferent, whatever changes are coming down the pike.
And Will, maybe we'll give you the final word on the next few years in the marketplace payment space.
Yeah, thanks, John. So I agree with what Howard said earlier. This is a fun time to be in payments. The second thing I would say is every time I get asked this type of question, I always have a famous Ray Dalio quote, because it saves me the embarrassment of getting it completely wrong, is that he who lives by the crystal ball will eat shattered glass. My push to people is think about this in terms of inflection points, right? Like, we know there's a few inevitable things. Technology is going to continue to drive, data is going to continue to go up. The inflection point is probably going to look like things like personalization that's driven by that data. So to what Allison's mentioning about things like augmented reality, our ability to drive data into that's going to be really interesting. The second, I think Howard's touched on, but there's going to be a lot of inflection between regulatory shift plus new business models like third-party sellers. Where those two things intersect, I think, is really where there's going to be a huge amount of interest. The final point I would make is you're probably looking at a couple of us that are interested in payments here that are really working ourselves out of jobs. Payments are going to get felt less and less and less as data technology and all of this starts to increase. You're going to have much higher velocity, much sort of more scaled payments. And ultimately what that means is we'll feel payments less than we do today, which I think is quite an interesting oxymoron when you think about what we've been doing over the last couple of years.
It sure is. Thank you, Allison, Howard, Will. I think it's been a really interesting discussion. And on behalf of Payments Canada, I'd like to thank everybody for taking the time to watch this discussion. I hope you've learned a little bit more about marketplace payments and what's going on. I think we've covered some interesting topics spanning, changing consumer behaviors, regulation, risk management, and looking forward to the exciting years up ahead of us. Thanks, everybody.